Good afternoon, everyone. It's 20 to 3 here on Friday, the 18th of June, and you can see that the tide has turned and turned strongly after the FOMC meeting on Wednesday night UK time. I didn't particularly think that the output from the meeting was particularly hawkish, i.e. Rates going up, but nevertheless there's no point in arguing with the market, and the market certainly felt that the talk was hawkish and that interest rates will go up sooner rather than later, and that certainly caused the gold market to fall through the floor, precious all commodities to fall through the floor, and as you can see, the stock market on the back foot. Dow is down 366 points at the open on Friday, the S&P 34 points, and the Nasdaq that was strong yesterday is down 75 points. So Vectorvest does not advocate buying any stocks at this time, and I've pretty much cut all my US positions. If we have a look at the intraday market, that's the S&P 500 on a 4-hour chart. And as you can see, that's the breakdown that we've had, and markets trying to find support somewhere around these levels. We don't know how far this is going to be, so we just have to be very careful with stops. Certainly all my leverage positions, I've cut out most of them, so pretty much in cash in the spread betting account. Let's have a look at gold. Well, there's the gold market, folks, and it fell very strongly right on the FOMC talk, and it went through a support level like a knife through butter here on that evening, on Wednesday evening. I actually, like a fool, had a long position at support just here and got stopped out of that. It's a small loss, it's not the end of the world, and as you can see, it's fallen very quickly, and the low of yesterday, in fact, is a 62% retracement of this range. The theory that it would come back and kiss this old trend line has long since gone, and market, although it was strong this morning, pushing very strongly to get down through the 1767 level. If that level goes, then the next level would be 1726. So what to do? Well, first of all, I've told everybody who's listened to me over the weeks and months that gold is an aggressive opportunity. We are playing for a huge pot here, and the target from the technical weekly chart is a long way up, and that will not be given away easily. If we have a look at Vectorvest UK, and if I go into my watch list viewer and go to here, I've got two gold stocks that I've invested in, one blue chip one and one smaller one, and they're both pretty much doing the same thing. So that's polymetal, folks, and I've held this for a long time, and as you know, we've sweated in it for a long time. For me, the line in the sand is this £14 level, and if it breaks that level, it's still got a way to go, but if it breaks that level, then I should cut quite a bit of the position. Now, in times like this, I remind my very first desk head, who was a very aggressive Scotsman. He would have been down in London this weekend for the game, and I don't think there's many people left in Scotland because they all seem to be wandering around Notting Hill this morning. But in good spirits they are as well. As long as it stays above that £14 level, I'm going to keep some position. But folks, he would have told us this morning, he's long since dead, but he would have told us this morning that we should lighten our position. So folks, what I'm going to do, and this is just me, not you, but what I'm going to do is if I see the gold market breaking through 1767, then I'm going to lighten that position. I'm going to actually get out of half of it. Okay, that's what I'm going to do. I can always get back in again. So if I see it falling through that 1767 level, Hopefully it'll find support there. I'm going to cut this position by half and sit in half as long as it stays above the £14 level, and pretty much going to do the same with Pan-African Resources. That's Pan-African Resources. I'm very happy with this pattern here. This is this line in the sand here that goes right back to here, and I think that I'm going to lighten half that position today if the gold price falls through that level, and it could easily do that while I'm still rattling on here. And I'll keep the rest of the position as long as it stays and respects that 15p level. So that is what I want to do with those two gold shares. I'm not saying you should do that. Maybe you want to get out of the whole thing. That's up to you. Just remember, folks, that you should not be in gold stocks unless you've got a stomach, unless you class yourself as an adventurous investor. And if you want a quiet life, then just resort the stocks on VectorVest by relative safety and just apply the VectorVest worry-free trading plan. It's easy. Those of you that know Susan Thornborough, Susan and I are about the same age, but she only looks at conservative worry-free stocks, and she looks 35 and I look 90 this morning because of these gold stocks. So they're not for everybody, and if I had any wit I would never go anywhere near them. However, I seem to be addicted to gold stocks because they were very good to me in the past. I paid off my very first house in South Africa with gold stocks, and that was in 1986. And I've been fond of them ever since. They've been very kind to me over the years, but certainly they're putting me through the motions over the last few months. That's just the way it is. In my very first job, we were taught one of the core principles of my first job was cheerfulness in adversity. So let's have a look at another commodity stock that's maybe given us a little bit of grief as well. If I go to, I've got it open on the stock viewer. I think it's BlackRock World Mining, and this is an investment trust that I'm well up on. But it's pulled back with the copper price, and it's got all the usual suspects in there: Anglo American, Glencore, Rio Tinto, all the big miners in there. The numbers on VectorVest could not be better, okay, but it's pulled back, and it certainly got caught in the wrong foot by the FOMC the other day. As you would suspect, it's also sitting at a fib level, this time a 78% retracement of the last range, and as you can see, the lows of the last couple of days defined by that 78% level. Folks, as long as it stays above that 78% level, then I'm okay. I'm still holding it. A close below that 78% level, then it just needs to go for the time being. I bought into it somewhere about here, so I'm still well in the money, given a bit back, but what can you do? So the last time I looked, it was sitting about that 78% level. So let's go back to the gold market now, and the gold market still hasn't got down through that 1765, 1767 level. So that's what I'm going to do, folks. If that level goes, I'm going to lighten my gold positions and hold on to half of what's remaining, as long as it stays above those two levels that I spoke about a few minutes ago. And BlackRock World Mining, as long as it stays above that 78% level, then I'll give it the benefit of the doubt. If it closes below that level, then I'm going to bank those profits. I can always get back in again. For the remainder of the UK portfolio, Halma had an exceptionally good day a couple of days ago, and then it had a bad day yesterday. It seems to have made up some of that ground. The rest of them are all doing fine, and with the exception of Kainos, which doesn't seem to be making much ground. If we do move to a DEW down, I don't think we've got that far yet in fact, I'm sure we haven't got that far yet in the UK market, or confirmed down, then I have to have a long look at the portfolio and in fact get out of those shares that haven't performed on the way up. Always easy to do these videos when things are going well, not so easy to do them when you get a smack, but as I say, cheerfulness in adversity. So maybe you've been taught a lesson about gold stocks and commodity stocks, and maybe you'll make a decision never to go near them again. Certainly, if I was managing money for somebody else, then I would do my best to stay well clear of them, except for a very small part of the portfolio. So back to the VectorVest US, nothing much has changed. The Dow is down 370 points on the day, the S&P 31 points on the day, and those levels on the S&P for the moment holding. I bet there's a 78% retracement down there somewhere that the fibs will be holding on to. Yeah, look, there it is, you see, somewhere around there at 4188, very important level. So a weekday, certainly not a day to be buying any shares, a day to be watching your stop losses very carefully indeed. I think that this is an overreaction. I didn't think the FOMC was that hawkish, i.e. rates rising, but I certainly can't argue with the market, because the market in fact ran for cover. So I'll be back on Monday afternoon with the UK Q&A. Tomorrow afternoon I'm doing a talk on worry-free investing at 4 p.m. UK time, and if you go to vectorvest.co.uk you should actually be able to grab an invite for that. If you can't find it, then email me david.paul@vectorvest.com and I'll send you off an invite for that and for Monday afternoon if you wish. Thanks very much indeed. Bye bye.